Welcome back to Mastering Options Trading. So today I have brought to you a very unique video, very unlikely that you will find anywhere on internet, right? It is pretty much unique, right? So me being a trader for almost 10 years, I figured out some things will not work for sure and some things will definitely work, right? So from my own experience, I will share you the template which I follow. I can assure you that if you follow this, 100% your trading will improve. There is no doubt about it. You can try this out and let me know if anything is not working for you. I can definitely, guaranteedly say that your trading will definitely improve, right? So, certain things before I explain the exact steps how to become a successful trader. First thing is, in my first year, what I used to do is when I was learning stock market, I used to follow the tips that were coming on TV, right? So I saw what I used to do is to create an Excel sheet, note down what tips they are giving, and note down the probability of winning and all, right? It was very, very poor. Less than 50% was the success rate, be it any, I don't want to name, but any TV channels or any YouTubers, Telegram, whatever it is, the success rate was very, very low, right? So I decided that this is not the way where I can become a successful trader. Next, what I did, I started watching some strategies which are put on YouTube, Twitter, wherever, right? I thought, okay, it sounds very nice. Two trades, if you take, you will feel, wow, this strategy is working very well. And then once you start making money, a couple of trades will go well, and then suddenly you will start making a big loss, right? And then you will start doubting the strategy itself. So that also did not work out well. Then finally, what I did is I decided that this is not how things will work. I will figure out my own template. So I have put seven crucial steps. If you follow this, you'll definitely make a winning trades, right? So I'll give you an example as well. First of all, most important thing, a lot of retailers don't have a strong theoretical knowledge. People don't know, some of them don't know what is RSI, what is moving averages, how they function, what is the use of it, how many types of moving averages are there. In RSI, what are the parameters, what is 14,3, all that several minute details people will not know in the initial years of trading. So you need to build a strong theoretical knowledge. You can use sources like NISM, which is nothing but the certification by NSE. Investopedia is a free website just like Wikipedia. Investopedia is for investment related or trading stock market related. Small definitions with examples, very, very good website where I learned a lot of definitions, right? So just Google out, for example, today you don't know what is a morning star pattern or a crossover pattern, right? Simply type crossover Investopedia in Google, you'll get an example and then you can read that example thoroughly and understand the concepts. So first and foremost, which is 50% of your work, is to gain the strong theoretical knowledge. Next, let's take an example, then we will understand better what is this base hypothesis. So somebody, let's say, told you that, let's say I only told you that whenever there is a crossover, right? So I have taken 9 EMA and 21 EMA for example. So what I'm saying is wherever there is a crossover where 9 EMA goes above 21 EMA, then you will get a bullish trade. This is my base hypothesis. So I will write that entry point, wherever the crossover happens, that is an entry point, and whenever the candle closes below the 21 EMA, which is this candle, right? So this is the exit point. So this is entry, this is exit, clearly defined, right? Above crossover, whenever a single candle closes, that is entry. Below the 21 moving average, that is my exit point. So that is my hypothesis. So write down that hypothesis, and then what you will do is you will start testing the probability. For example, here let's say at this candle closing, if you see 9 EMA is greater than 21 EMA, that means a crossover has happened. Now, if I had taken an entry here, right, at this point on 1st of January, I would have made 405 points or 1.71%. 405 points on Nifty is huge money, right? So today, if I tell you this is a successful strategy, you'll directly jump and start trading tomorrow itself. But do you know how many times this will work and how many times this will not work? That you don't know, right? So what you need to do is you need to capture the results. For example, I have written down the same here. 1st January, I would have entered. 3rd January, I would have exited. What is the entry point? The entry point here is the closing price, 23,653. I have written down the same thing. What is the exit point? Whenever it closed below the 21 EMA, that is my exit point. What is the closing price here? 24,048. So how much profit I've made? 405 points, right? Now, will this always work? We don't know. So what we need to do, we need to go back and backtest. So if you see carefully, there is one more entry point here, right? After this green candle, basically 9 EMA was about 21 EMA. This was an entry point. Where is the exit point in this candle? It closed below the 21 EMA. So this was the exit point. So what are the entry exit points as per the numbers, right? So the closing price here is 23,680, right? So I've written down the same thing. And then I saw 69 points was a loss trade. Then I checked when is the next previous bullish crossover, right? So crossover happened here, right? And then I saw what is the loss. It is 80 points. Now what I will do, this is all one important thing. We are doing this strategy on a 15 minutes time frame. What is the ideal time period where you need to test 15 minutes strategy, right? At least 2 years of data you need to check whether the strategy will work or not. Then only it becomes a meaningful strategy. So for 15 minute strategies, minimum 2 years of backtesting. For daily time frame strategies, minimum 7 to 10 years of backtesting is required. Anything like weekly and monthly, it's better to backtest till at least till 1992, 1990, may not be 1992, but at least till 1996 onwards it should be working, right? So all of my strategies that I discuss in my webinar, as well as I which I created for my own self, right, initially. So all of these are quite fully back tested, right? Now how does this help? Why am I saying that we need to take data for 2 years? Is because with only 2 3 samples the probability looks like okay, 400 points plus, 69 points loss, 80 points loss. In net I would have made around 256 points profit, but that is not a good conclusion, right? So for us to understand how many times it works, how many times it fails, you need at least 200 to 400 data points, and then only it will make sense, right? So you need to manually go and check, which write down the date, write down what would have been the entry point, what is the exit point, and then see. Now what is important after that is, you know the base hypothesis, you started doing back testing. Now you need to know the win to loss ratio. Now what is the win to loss ratio? Out of 3 trades, one trade is successful, 2 trades are unsuccessful. So the winning probability is 33%. Just an example, okay? Then we need to ignore the strategy. Let's assume instead of 33%, it was 74%. Then it's a good strategy. Then we can proceed with the further steps. Not only the winning probability, you should see the average. If I win, how many points I'm winning. If I lose, how many points I'm losing. Yeah, with these 3 data points, you see the profit is very big, but the losses, whenever it happens, are very small. So that is a good strategy, right? So you completed steps till fourth one. Now fifth one adjustment. What only by observing the data, what I will do is to improve my probability. Let's say 30th of December was a Thursday, just for example. So it was expiry day. Some of the strategies may not work on expiry day. So I started eliminating that. Now what is the winning probability? So it is 50% is the winning probability. If you see profit is 405, loss is 69 only. So this is how you need to end up with strategies which have at least 75% winning probability, or at least 70% is minimum required for a for us to conclude a strategy, right? After this one, what you need to do, once you know that okay, some of the days if you avoid, your winning percentage is improving, right? Next, what you should do after this is you should try this in real market. That is called forward testing. So minimum forward testing I would suggest for any strategy is at least 2 to 3 months you need to forward test. For example, let's say this crossover is successful tomorrow, or whenever the market opens, every day very religiously, either during the market or post market is also fine. 2 to 3 months of hard work is required. You need to note down the results. Okay, next day the crossover happened here. This was the entry, this was the exit. Same template you use and note down the results, right? And then if you see the winning probability is close to 70%, then that means it is a very good and a fully tested strategy. After this, what you need to do, you need to start the actual execution. How do you start the actual execution? You will start taking by trades, 2 trades, I mean 2 lots, 1 lot, whatever. For example, we are taking a bullish crossover trade. So what you will do, I'll simply go for a ATM call option. Let's say the entry is 23,653. I will simply buy a 23,700 or a 23,600 call and hold till profits, right? Whenever the exit point comes, I will hold that. And you need to actually trade 1 to 2 lots initially. For how many days you need to do this? 1 month at least, or 1 to 2 months at least, you need to try this, because some days are volatile, some days are flat, some days are like gamma moves are possible and all, right? So all scenarios this strategy should work. So at least 1 to 2 months minimum is what you need to forward test with real money, right? Not paper trading. Paper trading work is already over. You need to try with real money. After that, if you start making profits slowly, then what you need to do is very simple. The last step is the most simplest step. Today, if you started with 1 lakh capital, 1 month later, make it 2 lakh capital. 2 months later, make it 3 lakh capital. Slowly, step by step, you need to increase the capital. The actual part is still here. If you do all of these steps, and then if you ensure that you are making profits consistently, it need not be every day, but at least over 1 month, if you made, let's say, 5% profit, 7% profit, whatever it is, then the last step will be to increase your capital. What people often do is they neither have strong knowledge. Okay, let's say some of them have strong knowledge, but they don't know what is the base hypothesis, what is the winning probability. Any of my strategies, if you ask me what is the probability, I'll be able to tell, because whatever I follow at least will have 70% winning probability, else I will not even touch that trade. Now one more simple example, in case you didn't understand the crossover concept. Another example I'll give you. Every day in my videos I've been telling that three candlestick patterns, right? So for example, bullish candle followed by a doji followed by a bearish candle, something like that, right? Let's take this example. Bearish candle followed by doji followed by bullish candle. This is what morning star. So entry will be at the close of this particular candle. Stop loss will be at the low of the doji candle. So this is my hypothesis. Entry here, exit, sorry, yeah, stop loss is at the low of the doji candle. So exit point, either first resistance will be my exit point, or let's say I'm taking a risk of 50 points here, so I will target 50 points upside or 100 points upside. So that will become a 1:2 risk reward ratio trade, right? Clearly you should define. Let's take one example. So this example was successful, it gave very good profits, right? Let's see one more occurrence where it worked or it failed. So if you see, this worked here as well. Bearish candle, doji followed by bullish candle. So the same morning star. So 1:1 or 1:2 risk reward ratio. Would it have worked? Definitely it have worked, because it never came to the low of this doji candle. That means this is a successful strategy. But the point is, I'm just showing two data points. Like this, minimum 2 years you need to backtest. If you do this, if you put all that hard work only, you will be able to make money. Money making in stock market is not as easy as it appears. People say these levels, if you follow, you'll win and all, but that is all temporary. Over a long period, if you want to become successful trader and start increasing your capital and multiply that, the only way to do that is yourself should be very confident on your strategies, right? So I hope this 7 step procedure on gaining theoretical knowledge, writing down the hypothesis, then backtesting, then knowing the probability, then knowing when to avoid this strategy and when to execute with higher quantity, or whatever minor adjustments that you need to do, you can do, and then forward test and finally execute and then increase your capital, right? If you do this, there is almost assured that whatever profit loss you're making today, it will definitely improve. And do let me know in the comment box about how useful this video for you has been for you, and then I'll come up with similar useful strategies that will help you out, right? So I hope this video was helpful. This is from my own personal experience, and that is one of the key reasons why I do not talk about any news, why I do not talk about anyone else's analysis, is simply because I have full confidence in my analysis. I have done all of these steps for hundreds of strategies. Only thing is, whichever did not work. So some strategies failed in back testing, some strategies failed in forward testing. Right? I ignored all of those strategies. Finally, I have ended up with close to 24 or 20 to 24 strategies, you can say. Out of that, there are 12 core strategies which, like, I'm like 99.9% confident that they will work. Again, every strategy has a probability. I know the probability and I only trade based on those setups, right? So solid setups is what I have created. That's the reason how I have won the open trading challenges and able to predict that 2500 points fall or 2000 points fall and all, and many other open challenges, right? So whatever I have done on and put on YouTube videos, right, it is all because of my own strategies. So I just follow them very religiously. What is the benefit of doing this procedure is, tomorrow you're not afraid of anyone, any news, anybody telling any market view, nothing can disturb you once you know that you have your strategy works. If you satisfy your own strategy and prove it to yourself, no need to ask anyone's profit and loss. No need to ask anyone, will I lose here, should I exit here? Nothing. You are independent, right? You know your strategy in and out, and definitely it will be a good thing to follow, right? So I hope this video is helpful. Please do like, share, and comment. Thank you all. Have a good day.